Everyone, we're back live. It's the I'm not sure. I'm not sure if it's day 22, 23, but we're back on the live. Just good to be back. Again, doing this every day, and yeah, not stopping for the full year. So we have this conflict in the Gulf countries where I live. Currently in Saudi, so that's why the background is not good. But I'm flying out tomorrow to Europe. So yeah, still not gonna be the best setup, but we do as we can. So yesterday, so what we do on these streams, just quickly, we do market updates. We're running on the side like a 100K to a million challenge, more for marketing stunt, I have to say, but I think I do have valuable things to share here, and that's what I do for the first 10, 15 minutes, and then we discuss about products. And we do have exciting updates on the product for today, so really, really excited for this. Quickly on the stream yesterday, we've highlighted the structure, that we are in a range-bound environment, and that's how we've traded this. The market overall. When I look at the market, I'll always take BTC as a bias, and it's hard for me to flip long when BTC is weak. And so yesterday we've highlighted that currently just positioning is short. We have a bad entry on a BTC short, and we're currently positive on a Navi short that we took from higher. Again, we've shared this whole challenge, live. So if you're interested, you can watch the other videos for further context. And so what we said yesterday is, yesterday we're pretty much at, on yesterday's stream we were, where were we? We were like 70, 71. I think what we said is we're waiting for 70 to hold. Otherwise, that could have ended up being a deviation of the range, which it ended up becoming, at least from what we see today. And I guess the thesis for yesterday for not having covered the short, because we were pretty in the red, is obviously at some point you have to admit that you're wrong, and you have to. I would say the risk management on that trade was not good, but it was a combined view of fundamentals and just market structure going to this move, where you have the big OI ramp up, and my view was that the market was underpricing the credit risks, oil, and that also. Just the GCC conflict is having, I think, a much bigger impact, like with the Hormuz Strait and stuff. I'm not an expert on this, I'm not gonna lie, but I just do feel like the market at the top was being pretty complacent. Now, we also highlighted that being short when BTC is down 90%, 50%, is not good risk return. Like realistically, in the next few months, it's going to be much higher, hopefully. So you want to, I would much rather be long than short. And so once we cover this short, we'll look for longs in the markets, whether we're talking about altcoins or BTC. It's a pretty hard market, I have to say. You have no real direction. That's a range. But so far we've played it nicely. But we still have to, just stay. Like my view is that we probably just test the range lows. I wanna stay in the positions we are in today, because the S&P is down 1% today, and it's sort of falling off a cliff here. It's not, obviously it's not too drastic, but if we take the 200-day EMA, I think it's likely we tag this and then probably get some kind of relief. But typically, when I look at a trade, I have to look at what day are we, and we're going into the weekend with very red markets, VIX that's super high, headline risks, a very bad NFT prints, and I just don't see a meaningful bounce. And most of the big moves usually happen on weekends, or specifically for crypto. If not weekends, then Monday at the open, and I think a lot of people see this range and will not. I don't think we have the strength to go above this range during the weekends. Things we might have a big taco. So taco being Trump always chickens out. So we know that the market does not. I mean, Trump does not like the market to be red. But I also have a view that things will resolve fairly quickly. Trump has got midterms fairly soon. He doesn't want to be dragged in a conflict for so long. So I'm confident that there is a big long opportunity coming into next week or mid-March. So that's why I also don't want to don't have so much conviction in the shorts we're in today. I think I'd be very easy to be very fast to flip bias. Current levels I'm interested is it's not necessarily levels to me, it's more time, as I'm interested to look at the price. I don't think just anything tremendous is going to happen over the weekends. I just want to hold. I never hold heavy long positions on the weekends. I'm only comfortable with shorts, especially when the high time frame trend is down. I think you can get a big move down, but I'm less interested in levels, more in timing. I think Monday open is probably where we want to cover. Around CME open or New York open, and then we'll probably get some news over the weekend, and then just reassess from here. But levels we're looking at is probably. Here we've tagged the range, but we have to assume it's a range. So we had the deviation here on the range highs, and it would make sense to deviate from range lows, somewhere around here, and then take a trade, somewhere in this zone between 60 and 55. In these conditions, because price action is it's pretty fast. We went from 66 to 74 quickly. You want to scale the orders, but overall, a good tool I use is this tool, which we've built internally. Is this knife catch tool, which tells you if we are the end of a downtrend or the start of a downtrend, and it gives you a good invalidation. So typically now, if you want to go long, which I don't really advertise because spots is selling very aggressively, at least you have your invalidation level, which today is 6,800. Basically you're betting on a higher low. I'm not too convinced there, and I definitely don't want to I'll never flip long here. That's just not gonna happen. It's my system. I don't really day trade. I just do swings, and I think everything favors shorts here. If we look at, I haven't looked at markets today so much, but I'm curious to see what's the build up here in open interest. Is that people that were trapped from 70s and were betting on on a resistance, flipping a support on the range, or is it shorts piling up? I think regardless, you just have CVD. Like spot is not supporting this move, and so I think shorts have the upper hand. And I'd be curious to see. Hopefully over the weekend we clean some of that OI, whether that's on the long or the shorts. There's a pretty big ramp up in OI since this move, and I have little read in the market. I don't know whether that be shorts piling up or longs. It's whenever you look at the OI or just the composite of the of the derivative data, you always guess. You can't really tell what's the composition of that. But so levels I'm interested in quickly is again, like I start scaling out, depends on the timing and more of a timing guide than levels. But range lows, and that means we'll hold our shorts for the average short. We'll hold it through until BTC is to us bottomed. So a bit of a view. But I have to say, in like you'll see me in stream next week or two with a big long. Whether we're taking it from 58. And I have to say, just before that is when you have the price that drifts down, like don't knife catch over the weekends. Like things can spiral out really quickly. And I think historically, buying the dip on weekend has never been. I don't have the data to back this, but I just don't feel confident the risk return on longing dips on a high time frame trend on BTC is any good. So if anything, best is to wait for CME Open or New York Open. You might not get the bottom, but you get further confirmation. And if you ever want to really go long, you need to have a tight invalidation. And looking forward to flipping long, next week or in the next 2 weeks. And I think it's just much better to be long than short. I don't like to be short overall. Some good progress on the product was made. So this morning we've open sourced our A to AB booking algorithm. So we've been pretty transparent on the fact that yes, we're based on Hyperliquid, but the unit economics of a prop firm that's only A booking traders, or in fact also only B booking traders, is not the best, and we think that a hybrid model makes the most sense. And so we will show transparently on the analytics dashboard for a given trader whether the profile is A booked or B booked. For those that don't know, A book is we take the trade with the trader, so we route the trades through Hyperliquid. And B book, you stay on the paper trading engine, so we don't take the capital risks, but we still enforce the payouts. Our edge is not only Hyperliquid, but also transparency in how we operate. I think you have very few firms that give you the algorithm, which I think is really at the core, should really be at the core of the, just trust within the community and within the users. So you can go ahead and look for yourself on how we do it. Now I have to say it's going to change, and so you'll see things evolve over time. If you're more into coding or have a quant background, you might be interested in how we've implemented this. It's the first implementation, so it's pretty raw, but we'll test basically. I mean, we're already starting to test the reliability of this. We're not expert, so we're not experts in. It's hard to be experts in this without data, but we will do our best and we'll show the results. What we've implemented here, you can basically back test, because it's about predicting whether a trader is a good trader or a bad trader under any market circumstances. And we can backtest this. So if we said, over time, like what's our hit rate of targeting or labeling a trader as an A book trader or B book trader, and we will share that with the community. So we've open sourced that. That means we've made great progress on it internally. And the other thing that we've launched is we have this channel on Discord that's called Alpha Testers, and we've started to QA the trading terminal. So can actually show it to you guys. Well, it looks like this. It doesn't incorporate the latest changes, but you basically have just a trading terminal that you're used to. We don't reinvent much. What I like is this ribbon here, which shows you the drawdown limits, profit targets, just things that matter to you. We will, along with the liquidation price here, will show the what we call the drawdown price, but the price at which your challenge gets failed. And we'll just add more stuff over time, but we're getting the infra ready for the training competition. And what we've spent most time at the moment doing is stress testing the paper trading infrastructure, is making sure just things are solid and that we execute the trades based on the actual depth of the hyperliquid markets. So we replicate the trading experience one-to-one. And if you're wondering how we do the QA, we have we actually host this on, like, if you see this and you're interested in taking part in the QA, we have this this page. You need to have the right tag, so you need to have the alpha tester tag, which is this one, alpha tester, and you'll have access to this panel where you can basically you see some scenarios and you have to test against those. You have like 210 steps, so it's pretty thorough for QA. But this is QA1, and there will be hundreds of them, and that's going to be incentivized. We haven't shared the details just yet, but it's gonna last for the weekends, and we will make sure to troubleshoot anything and then ship really fast. Like I have to say the pace at which we're shipping this is insane. It's hard to catch up on the roadmap because just the number of pull requests or commits going into the code is crazy high, and that's just good to see. Even myself, like we're not vibe coding this, but certain aspects we can, but when it comes to the execution engine, risk management, all of that related to the booking, the actual booking, and so the trade execution, I'm not going to touch this. Here you see some other field because I'm running we're running a training algorithm. So here you can see a training algorithm that's the P&L is so bad, I have to say. I'm almost blowing out the account, but we are running some strategies to stress test the infra continuously. So to just tell us what's going on, and just stress test the infrastructure overall. So I'm trying to see if we're forgetting anything, but I have to say we've made great progress. And we'll end on this, but we've made great progress on the growth. I'm happy with how this is going. We have we're tracking the most relevant data, but we've reached about 2 million of interest, and we had a big ramp up this week. We've started some external communication with some folks from the Hyperliquid community. And you can see here a pretty big correlation between the ramp up in Discord members, X forwards, and logically like the seed round interest. We don't have the date just yet of the seed round. We're waiting for Swissborg's date confirmation. that's gonna come next week. But yeah, we're making meaningful progress, not just on the product, but also on the growth and on the community, and obviously, on the challenge we're not doing too bad. Like we basically have a flat week, but given the market conditions, I take this as a win. And again, we're not like we had a big swing. I have to say, I think top to watermark we had like 20% drawdown, but that's my style, and I'm happy with it. It's also I look at markets. Some might think I look at markets all the time, but I look at at this chart and take trades on this basis, and it's also why I have to have big invalidations. Otherwise I'm just becoming a day trader, and I would just not be focused too much on a product. And trading is not something I fundamentally like. Like day trading is not what I want to do. I really want to do really want to build teams, build products, scale products, and that's to me how I generate the most value. So on that note, I wish you guys a very good Friday, and I have to go to a meeting now, and I see you tomorrow. I think it's gonna be tomorrow morning before, or we'll see. Potentially tomorrow evening after my flight. So cheers, everyone. Thanks for tuning in.